Today, were these European stress tests just a total joke?
Yeah, they were a total joke. That's a great way to put it, Brian. I mean, we actually wrote a note called lunacy because really only a lunatic would believe that these stress tests are legitimate. They're based on 2010 numbers. They're based on not even taking haircuts to Italy and Spain, never mind haircuts that are based on current yield spreads and certainly CDS moves. So it's a joke. I think most people who do their work realize that. And I think that's what's going on with Citigroup today. You know, they had a kind of a headline number that was a little squishy, 51 cents of reserve release. But the big question with Citigroup is what do you have in the back pocket on these European issues, and they don't know.
Keith, I want to dive a little more into what you were talking about with the haircuts here. And listen, we got to report the news. You know, it could have been market moving had it been bigger. When you're talking about the haircuts, what you're saying is when they did the test, they implied, let's say, a 5% cut on Greek debt over the next year. You're saying then that, if I hear you right, the market assumes much more, so the stress test did not nearly go far enough.
No, not even close. I mean, you look at these CDS moves in Greece and Portugal. I mean, we're not even in the area code of close. So 5%, you could go to 20% haircuts very easily and still be accused of being too lenient on these banks. What's surprising, Brian, which you noticed, is that some of these banks actually failed this test, which is alarming, suffice to say.
It's quite incredible, isn't it, when the regulators really bust their credibility last year, that they would actually risk it again by not making the stress test stressful enough this year. But my question to you is, Keith, to what extent do you feel that Ben Bernanke is following in the footsteps, essentially, of Greenspan by keeping us guessing, being a little bit ambiguous? And what did you do this week when he backpedaled on QE3?
Well, the first thing we did when he backpedaled was that we bought dollars and we shorted the euro. Everything is highly correlated to the dollar, so anyone who's been trading this market for the last 3 years knows that the Bernanke's go-to move, if he had a dance move, that would definitely be it, is to debotch the dollar. And the minute that, you know, he says what he said, which is I can't debotch it with a QE1 or a QE2 or a QE3, that's an implicit strengthening mechanism in the dollar, and it's also a weakener, you know, for the euro and anything really correlated to the euro.
So when you say that you bought dollars on that backpedaling, you really believe that the US dollar has got a good future, particularly against, for example, a higher yielding currency like the euro?
No, I think, you know, the future of the fiat fools, if you will, I mean, is not bright. I mean, if you look to Japan for that, Europe or the U.S. for that matter, it's a relative exercise. I think Einstein would enjoy this quite a bit, in fact. I mean, at the end of the day, I mean, you have what fiat fool bumps up against the biggest debt maturity, which is Spain and Italy, you know, in August and September, and, you know, tag you're it. You know, so they got the bigger problem coming down the pike in their nearer term. In the end, the U.S. is obviously going to have to deal with that, too.
You know, next week, Keith, we have the avalanche of earnings, and we have this the European issue hanging over our heads, and then we've got the debts. What are investors next week going to pay attention to? And also, in sincerity, they're going to let the earnings go by? They're going to focus on Europe? They're going to focus on debt ceiling?
Yeah, I think they go right back to Europe, Herb. I mean, ultimately, earnings is kind of an interesting thing in between, obviously, because earnings have been so good, as you know, for 6 consecutive quarters. They're not so good so far out of the box if you look at Capital One, even the JP Morgan reaction today, and obviously Citigroup looks terrible. But if you look forward and past the earnings season, it's going to be macro time again. And if you get back into that Greek period, don't forget, there are some big time events in middle of September for the Greeks in terms of austerity packages. But there are also some huge bond auctions in Italy and Spain, which we think is a much bigger situation to manage risk around than Greece itself.
All right, Keith and Herb, and I think both of you are sticking around. Or Keith, you are. Herb, you can, or we'll just hold you here physically. I just completely physically not let you leave.
His hands are tied.
They will be in the commercial.